How many times have you seen this? Strong bearish move, so you sell. But then as soon as you sell, the market seems to reverse straight back up in the opposite direction. So what are we missing? And what can we do to stop getting caught out like this? It seemed obvious. The market's clearly moving in a bearish direction. We want to sell and follow the trend. It moved bearish, but then decided it didn't want to continue and went in the opposite direction. Okay, what can we do? In practice, moves like this, more or less straight down, aren't that common, right? They're not unheard of, they do happen. But on the whole, the majority of times that we see a lot of movement in a particular direction, we tend to see this type of movement, right? This zigzag movement, rather than just straight down continuously for ages. We can see it on charts, okay? Movement down, a retracement back up, and then a continual movement down to put in lower lows and lower closes than before, okay? To continue on producing these downward red candles. So what's happened is we've seen a strong bearish move, but then we've seen a retracement back bullish, but then we've seen a continuation of the bearish move. If instead of buying here after the beginning of some bearish movement, if we wait and we see bearish move, a retracement, and then a continuation of the bearish movement, then we've seen a trend. We've seen not just a movement, but a movement, a rest, and then another movement. We've seen more movements. We've seen a movement followed by a break, followed by another movement. So we've seen more indications, not just of a bearish movement, which could be temporary, but a movement followed by a bit of a break and then more movement. This tends to indicate that the movement is not temporary. Now, of course, as you know, nothing is certain in Forex, okay? You can see all good signs, enter, and then it moves in the opposite direction. That's going to happen no matter what you do. It's about increasing the probability that you won't get caught out like that by looking for the pullback first to confirm a trend. Seen some bullish movement, but survived that and continued to move further bearish. That's a good indicator, as opposed to just an initial movement, which could be temporary. And if you follow this, look for the move, the pullback, and then the continuation of the move, you see a much stronger, in this case, bearish trend than you do if you just simply see some bearish movement and think, that's it, it's moving bearish, okay? Confirm the trend before you decide to say, it's moving bearish, better get in.